Hello, this is Jeff McTague and welcome. This is the 11th installment of my series on what I know to be the best mutual fund selection tool you're going to find. Today I want to introduce you to mutual fund selection trait number 9, R-squared. With mutual funds, an R-squared rating of 100 would suggest that the fund's movements correlate exactly to those of the index. In fact, it is very likely that these kind of funds are passive index-like performers. If that is the case, why bother with an actively managed fund and its extra expenses? If a fund has an R-squared of 75, it suggests that 25% of the fund's movements are unrelated to those of the index or benchmark. The manager is certainly actively managing that fund. In an effort to outperform the category benchmark, he or she is more than likely increasing or decreasing the volume of specific holdings or making investment choices outside the box. It could also be an indication that the manager is making buy and sell decisions outside the assigned category. And we talked about that problem when we talked about assets under management. We know this as style drift, which can be disruptive to your allocation model. A look at the past history of R-squared does not tell us much at all. In fact, it is at best confusing. I used domestic equity funds to see if there was a consistent correlation between R-squared and winning performance. Based on R-squared, as you can see, winners and losers in my surveys were very inconsistent. The only discernible change over the years was that a far higher percentage of funds had an R-squared that was inching much closer to 100. Should this be cause for concern? I certainly think so. The following stock and bond categories have had consistent enough R-squared averages that it is worth sharing. Please note that a good 30% of the categories have R-squareds in excess of 90. It might be why the majority of managers have a difficult time beating their assigned benchmark. With the high average R-squared of many of these categories, many funds have a very small part of the portfolio with which to make a difference. Coupled with what we have learned about alpha, I prefer funds with higher alpha and lower R-squared. Well, that's it for now. I thank you for listening. I hope you will join me for the next webcast, where you will discover the final 2 traits of my mutual fund selection process. Number 10, return last bull, and number 11, return last bear. Until then, this is Jeff McTague reminding you, unless you can prove it, it's just your opinion.
Right here, right now, right here, right